Hey guys, welcome to our channel. Today in this video, we will talk about what is financial assets. So, financial assets is a liquid assets that gets its value from a contractual right or ownership claim. Cash, stock, bond, mutual funds, and bank uh, deposit are all are example of financial assets. Unlike land, property, commodities, or other uh, physical assets, financial assets do not necessarily have inherent uh, physical worth or even a physical form. Rather, their value reflects factors of supply and demand in the marketplace in which they trade, as well as the degree of risk they carry. So, understanding of financial assets, more assets are categorized as either real, financial, or intangible. Real assets are physical assets that draw their value from substances or properties such as previous metals, land, real estate, and commodities like soybean, wheat, oil, and iron. Intangible assets are the value properties that is not physical in nature. They include patents, uh, trade marks, and intellectual properties. Financial assets are in between the other two assets. Financial assets may seem intangible, non physical, with only the stated value on a piece of paper, such as dollar bill or a listing on a computer screen. What that paper or listing represents through is a claim of ownership of an entity like a public company or contractual rights to payments, say the interest income from a bond. The underlying lining assets may be either real or intangible commodities, for example, or the real underlying assets that are pinned to such financial assets as commodity, future contract, or some exchange trade funds. Likewise, real estate is the real asset associated with a share of real estate investment trust. uh, Key takeaways: the financial assets are liquid assets of the represent and derives value from a claim of ownership of an entity or contractual right to future payments from a entity. Common types of financial assets are cash, equity, uh, instruments of an entity, a contractual right to receive financial assets from another entity, the contractual right to exchange financial assets or liability with another entity under favorable conditions, a contract that will settle in an entity on equity instrument. So next, pros and cons of a high liquid financial assets. The purest form of financial asset is such a cash equi equivalents, checking accounts, saving accounts, and money market accounts. Liquid accounts are easily turned into funds for paying bills or covering financial emergencies or pressing demands. Other varieties of financial assets might not be as liquid. Liquid is the ability to change a financial assets into cash quickly. For stocks, it is ability of an investor to buy or sell holding from a ready market.